Alrighty, folks, she's back. Last week she was at the Bigger Pockets event in Orlando, so I'm assuming we will get an update. But what I want to talk to Beth about is the real estate market, the housing market. She's a top 1% agent in the country. I came out a week or two ago talking about cancellations spiking. Redfin has validated that at 16.7%. So I got to figure out what's going on in King County, aka Seattle. But first, Beth, how is Bigger Pockets?
It was awesome. It was fun. This is my third year going, and it's been doubling in size almost every year that I've gone. And I have to say, I preferred it when it was a little smaller. I felt like I got to know more people that way and see more people that it's easier to find people in the crowd when the crowd is 500 people versus 3,000 people, for example.
Wow.
But it was great. What I can say is what I really loved about it was being around thousands of people who are doing the work was really inspiring, and that energy was really great, and got me fired up, especially thinking about our one rental at a time conference that we're going to do for the
February 17th and 18th
in February. I'm really jazzed about that, and that's going to be fun too. I like that. I think the size of that one's going to be perfect too, because it's going to allow for a lot of one-on-one where people can connect with the people that they've been watching on YouTube and through the community. And I'm looking forward to connecting with a lot of people in the one rental at a time community at that event too. So if anybody has any specific questions about that event, I'm happy to go deeper with anyone. But
yeah, I guess the one thing I'll ask, and it really leads into the next part of our conversation, is I have to imagine the vibe or the undercurrent or whatever you want to call that was very different, right? You've been 3 years in a row. The last 2 years, all the financial engineers were making money. Anybody could be a GP, Airbnb arbitrage, all this other, like it was prime time Bigger Pockets. This time, I don't know, 8% mortgage rates, things slowing down, flippers losing money, syndications blowing up. Was there the change in undercurrent, or was everybody still jazzed? And
everybody's still jazzed. And one thing I can say is they have so many breakouts that you can tailor it to whatever niche you're interested in. So flippers have their breakouts and syndicators have their breakouts, Airbnb, you name it, whatever it is, they've got it. So it really is going to depend on what your specific interests are. But what I can say is, at the keynote speeches, there wasn't anything that was like, it was a little bit of a different tone. It was more about how to invest in an uncertain market, what to do if things aren't going to be booming like they were, how to build a sustainable portfolio that's going to set you up for long-term wealth, not short-term potential gains. And I met a lot. I didn't meet nearly as many syndicators this year as I did previous years too, where it seemed like, I think last year it was like almost you throw a rock and you're going to hit 3 syndicators. It was a lot like that. And they were still there, I'm sure, but I didn't connect with nearly as many of them. It was more just regular folks doing the work who have a portfolio. Awesome. A lot of the small and mighty real estate investor, like Coach Carson was there. I didn't get to meet him, but I'm hoping maybe I will at the other.
Oh yeah, you will. You'll meet him.
But there was a lot of people kind of like me. I think of myself as being a small, but some might say mighty real estate investor, somebody who's had success without having to buy thousands of units or do any of these giant syndications or anything like that. Just buying one property at a time and building it over time, and
I love it.
Just making methodical improvements as time goes
I love
on.
it. Sounds like they were focused on operations, which is great to hear. So shout out to the Bigger Pockets team for doing it right.
I didn't hear any reckless, I didn't hear any crazy talk.
Oh, good.
Which was good. Awesome. Yeah, we need less of that out there.
Ned, less crazy talk, please. Yes, absolutely. Well, let's flip to the market. You obviously operate in a high-end market. I think the last medium sales will round it to $1 million. 8% mortgage rates, not 7, not 6, 8. That's got to get your attention. Now you are in a market where cash buyers do exist, so maybe they don't care. But what's going on? Cancellations, activity? What's the word?
I've been hearing a lot of this talk about cancellations, and I haven't really seen it hit my market in a meaningful way yet. So I did look just this morning. I looked to see what the latest was, because I look at it week by week. And so for this last week, for example, in King County, which is greater Seattle area, there was about, depending on the area in King County, between 5 and 10% failed back on market, failed sales, cancellations, whatever you want to call it. So something was under contract and then it went back on the market. And we're seeing
now just for So again, without context, I'm not really sure how to take 5 to 10%. Is
Mhm.
that historical normal? Is that below normal? A little higher? I have no idea.
So one thing that's a little frustrating for me is my MLS does not track this in any way that I can go back and look at my
Ah,
charts. And I even
that's not
emailed their
cool.
support department. I'm like, how can I find this info? Because all I'm going with was my IC anecdotally and my
Right.
weekly stats. I can track it. I
Right.
think that's a flaw in the way they have their data. But I think it's up a little bit, but
Makes
not
sense.
significantly. In
Okay.
the way our market operates is people put down large earnest money, and they tend to. I've worked in other briefly in out of state markets where say $1,500 earnest money was
Yeah.
normal. It's pretty
Right.
easy to walk away from $1,500 if you change your mind. If it's 50,000, you're a lot less likely to do that. So just saying, so in our area, it's usually around 3. If you wanted to make it, it's always negotiable. It's usually around 3% of the purchase price or
Okay.
so. And if we're talking $1,000,000, that's 30,000. So
Yeah.
it's granted, if you have an inspection contingency, you can walk away for any reason during that time. But
Right.
a lot of houses are bought without that in my market, even still. So
Wow. Okay.
it's not as easy to just change your mind. Even if you decide you don't like the rates, you have to show that you're not, a lender says you're not qualified for that. Like, you don't just get your earnest money back automatically. So
Yeah.
I
Okay.
think that helps keep our back on market failed sales lower than it might in other
All right.
areas.
Well,
Speculating there,
thinking,
just from what I'm seeing.
yeah. So thinking about that, the other thing I'm watching is net new listings.
Yeah.
Right. Net new listings usually heading into the winter go down. Right.
Yeah.
This is the slow period. So what are you seeing for net new listings? Are you seeing maybe there's a bunch of motivated sellers and maybe there's a bunch of failed Airbnb and lots of inventory is coming. So what are net new listings looking like?
It's been really slow out there with new listings. And I expect to see that slide between now and January because that's the seasonality of what we always see. And I think because of what the dynamics of what's going on right now with interest rates and uncertainty, we're going to see, and the fact that the people that are selling now tend to not be the move up seller buyer, that
Right.
segment of the market is still largely gone.
Yep.
That's been the story all year for 2023 and even the last half of 2022. I think that that's going to continue. And that's why our listings are down 20 to 30%
Hmm.
year over year. And it's not like they were great this time last year either.
They weren't
So
great.
it was already well past the peak at that point. So
Right.
usually we bottom out around January and then start to pick up again. So far it's following that trend. We are still, our pendings are down, new listings are down, solds are down, everything is just down. The only thing up though is our months of inventory went from 1.4 to 1.8. So
Yeah.
still, I wouldn't call it necessarily in the buyer's favor as far
Hmm.
as, we're looking for normally 4 to 6 months for
Mhm.
balance, they say, but I can't remember last time I've seen that in the Seattle
Yeah.
area, honestly.
Yeah.
So
So the other thing I'm looking at, net new listings down, but it's I guess so. Is active inventory rising, and it's just really demand's not there? So days on market's growing, or what's going on with active listings?
so active listings are down year over year, not significantly
Wow.
because they already were down before, but we're seeing a little bit down. I can pop up my charts if we want, but basically it's a little bit down, pending's down. Yeah, it's just it feels like this sense of just everything is just quiet. It's
Right.
almost going along with our weather around here. We've got like these foggy mornings and it just feels a little calm and still and
Mm,
just like nothing's happening. That said, there are people out there right now that are buying. Like the people that are out there buying right now have a reason where they're really motivated to buy. And the people that
yeah.
are selling right now have a reason that they're really motivated to sell. So it can be a good match out there for people. So I think sellers are realistic. The wish pricing, forget about it.
No. Yeah.
There's no room for that. None. Some people might still be doing that, but those listings are just ignored,
Yeah.
completely
They just
ignored.
age in place. Yeah.
Yeah.
Have you ever heard about the 5 Ds for why real estate transaction happen? Have you heard of
Yes.
that?
Let me see if I can remember. I see diapers,
Yep.
diamonds,
Yep.
uh, divorce,
Yep.
death, What's the
Yep.
fifth one?
Diploma.
Diplomas. Okay. Yeah.
Yeah. That's
So
what even with 18% mortgage rates, one of those 5Ds happen. There always be transactions. It's going to be very low. I think we're going to be below trend for 3 to 5 years, but the 5Ds still exist for buyers and sellers. And
yeah,
it
I'm
never
still
goes to
talking to
zero.
new sellers every week, and they're one of those. The other one, we have to find a way to make it a D, but job transfer, whatever that one would be. What could be a D? Help
I
us
don't
in the
know.
comments down
Yeah,
there.
comments below. What can make a 6D job
Yeah.
transfer?
Yeah, right. I guess if we're
There
the
you go.
military, it could be deployment or something like
Yeah,
that.
there you
But,
go. There you go. There you go.
we don't have
Oh,
too much of
that's
that in my area. But but I've seen the people that are moving for jobs, there's that too. So and that don't want to keep their home for a rental. I'm still not seeing that many people wanting to keep their home for a rental, as much as I am a
okay.
fan of that.
Yeah. Is that
People don't
maybe
want to.
price point? I mean, you got some pretty hefty price points where you are. They're like,
Yeah.
it just doesn't make sense, maybe.
Right. With my median price in my sub area buy box, if you will, is about 1.4.
Woo!
So there's a lot of equity there. A lot of people have 500 to maybe a million in equity, and they want to roll that into their next purchase. And I get
Yeah.
that. It makes sense. And also
Yeah.
the fact that there's such a wide disparity between what your mortgage payment would be on a house versus what your rent would be on the house that you're departing from. It doesn't make sense for a lot of people. So, but
Total
that's why,
sense.
yeah, that's another reason why it makes it a little tough for investors buying right now to get the cash flow, because there's a huge, you can rent for far cheaper right now than you can for thousands of dollars less per month, the same house, than if you were to purchase it.
Yeah.
So,
So at the end of the day, what I'm hearing you say is we're basically in the fog, right? It's a slow period. It's gonna be worse than normal. I think this will be worse than last year. Transaction rise, inventory rise, more cancellations. It's just we're in it,
yeah.
and I have no idea how this turns out. I've told people I don't come February 1st or January 31st, I'll revisit this because I don't know, right? We get to the spring selling season and we're at 6.5% mortgage rates. I'll have one opinion. We get to spring selling season and we're at 9.5%. I'm going to have an entirely different opinion.
Yeah.
So I just know right now it's going to be pretty slow.
I agree with you 100%. I'm with you. I don't have a good feeling for being able to predict more than 3 months out right now.
Yeah.
Because I wouldn't have thought, if you had reminded to the 6 months ago, I wouldn't have thought we would have been at 8 right now.
Yeah, me neither.
I would have thought we would be maybe, I don't know, mid sixes or somewhere around there. Like I thought we would come down from the peak a little bit by the end of the year. That's what all
Right.
the economists and people were saying, at least the ones that I was hearing from.
Yep.
Just goes to show they don't know either, So
Yeah, it's funny. Jamie Dimon just called out all the economists. Apparently last year, this time, 100% of economists surveyed said we have a recession in the next 12 months. They were all wrong, myself included. But yeah, it's pretty wild to think about. Pretty
So
crazy.
what do? I think the best thing we can do is just try to I think not taking action is not the right
Not
plan.
the
Just
right.
doing
No.
nothing never helped anyone. But I
Yeah.
think that what makes sense to do is to evaluate best case scenario, most likely scenario, and then maybe worst case scenario, and plan it out for what your game plan would be for each of those scenarios and how you would cover for that. And right now
Yeah.
I'm erring on a little bit on the more conservative side, definitely.
Sure.
So I've never been super my risk tolerance, I guess, being a real estate investor and being a self-employed real estate person is,
Yeah. A little
maybe
higher than normal.
higher than
Yeah.
normal, but still, it's like there are some that are way out there reckless, and I've never been one of those. I've always been
Yeah.
one, like, you can do those reckless things, but make sure you've got your bases covered. You got reserves, you got,
Yeah.
your rainy day plan set up,
Yeah.
so you have to have some sort of fallback to fall back on. And I'll be honest, I've been falling back on some of those plans this year, because I've been got a 1-2 punch in a few different ways this year, but having that plan is what helped me get through it. But I'm still going forward and thinking into next year, what I want my action plan to be for next year. But, like you were talking about, if I do, so I'm in maybe a little bit of a holding pattern for my own personal reasons for my rental portfolio right now. But if I do make purchases, which I'm always looking, I looked at one yesterday, but it's got to be, the numbers have got to blow me away for it to be
Yeah.
worth it.
Only great deals. I told people a month
Yeah.
ago, never stop because you just never know.
Mm-hmm.
Never stop, but only great. We're not doing good deals. No good. We'll come back in February and we'll see where we're at as a group, but only great deals. They got to blow you away. They got to be grand slam home runs, cash flow day one, easy value add, whatever it is. Only great deals. Only great deals.
Yeah, and the offers I've been making right now for my clients, I've been we're asking for, like, whatever it is, we're asking.
There you go.
And the response has been a little warmer than I would have thought too, like the disrespectful or the aggressive or whatever you want to
whatever
call
you
it,
call
low offer,
yeah.
whatever, better received.
Buyers are in the driver's seat.
They are.
Buyers are rare today. So if you're a buyer and you happen to be shopping, be aggressive. What are you doing writing full price offers? Come on now. You're better than that.
Yeah, and look for the ones that I still like the ones that have a value add, like a way, some sort of angle where you can make it better that maybe others don't see.
Absolutely.
And that just becomes from doing the daily work and watching, and even if you're not doing anything this month, you should still be out there every day looking so that you can spot the right opportunity when it comes along, the great opportunities that are out there right now, and especially between now and the New Year's, where it's going to be so silent and quiet.
I'm so excited for the next 6 weeks, the next 6 weeks, or I guess 8 weeks. I'm excited for the next 6 weeks. Every year you just one pops up like, well, guess I got to buy that one.
I know. Sometimes it just, sometimes it was too good to pass up. I mean, I'm the first one to say I'm not going to buy it for a while, and then some great deal pops up and like, okay, I guess I'm going to buy it. But it's got to have that wow factor, especially now,
Absolutely.
So not the time to be making reckless offers. Be aggressive in making sure your own interests are coming first. So and you're not going to have a lot of competition out there right now as an investor. Like the investor type properties, that pool is even smaller. So I'm excited. A lot of opportunities out there.
Well, Beth, one of the things that you do for our audience, which I can't believe you do, but you do it for us, is you make referrals to other top 1% agents, and birds of a feather flock together. So Beth's number one in King County. She's got agents across the country that can help you. If somebody wanted a referral to their market because they can't work with you out of Washington, how would they do that?
I do. Yeah. So folks have been reaching out to me at BethTraversogroup.com. And I love connecting with the one rental at a time community. It's so fun to get to know people and their stories and be a matchmaker for them. So feel free to reach out. I'm easy to find. You can just Google my name, which is there in the corner, and you'll find me. And my website's the best way to reach out. So look forward to hearing from folks.
Thank you so much. Have an amazing week. Take care of yourself. Welcome back.
Thank you. You too.